Welcome to another video of selling life insurance over the phone. In today's video, we're going to talk about taxes and how to pay lower taxes with your business that you're going to run from your home or home office. The first thing I want to talk about is the expenses that you're going to have when you run this business, and this is going to be strictly selling life insurance over the phone. So here's the expenses that you're going to need. Number one, whenever you join our group, you're going to be asked to secure a state so that you're the exclusive person for that state for a website in a niche market. You'll be the only person that's in that state. You'll be the only person representing that state. So when somebody goes to a website like realestateinsuranceplans.com, they'll click on their state. Like for me, I'm using the state of Texas. You click on Texas, and then only one person appears. So what you'll do is you will pay for this state. You'll be the only person for that state, and that is a one-time fee of $125. That is a write-off. You can write that off as a business expense. Your next expense is the SalesDialers, using the dialing system, where you can make about 200 calls per hour. That's going to run you around $100 a month if you use the promo code. If you decide you don't want to put the promo code in, then it's going to cost you $110. If you want the promo code, call me and I'll give it to you. So that's a ongoing expense of $100 per month. Then you have the $15 a month fee that goes to the IMO, which involves the quoting system, the e-app, and a case manager who's going to do all of the paperwork for you once you submit that application, all the way to it getting paid. So your first expense is $125. That's a one-time fee. And then your ongoing monthly expense is $115. I don't know of any business that you can run where you're going to pay less than $115 a month to run a business. Of course, you're going to need a cell phone. That's to make your calls. You don't need a landline. You don't need a special phone. I do everything from my cell phone. Let's see what else you're going to need. You're going to need a computer. Computer is pretty important. That way you can run your quotes. Hopefully you have already bought a computer and you're watching this on a computer system. So hopefully that expense is done. Now, the beautiful thing about a computer is that if you set up the right corporation, you can write that computer off as an expense. I'm not sure what the rules are in your state, but in some states you can depreciate that computer expense over the course of some years. Let's talk about other expenses. Bad news. There are no other expenses. And that's one of the things my CPA yells at me, is that he tells me that I'm not spending enough money. Now, wouldn't it be nice for a CPA to tell you that you're not spending enough money? You're making too much money and you don't have enough expenses? Well, the way to avoid the taxes, not avoid the taxes, but defer the taxes, is through a corporation. One of the corporations, I've had two different corporations, one for real estate, one for insurance. For my insurance agency, I run it through an S Corp or sub S corporation. In real estate, I ran it through an LLC. I found out through trial and error that the sub S was a better corporation for me based on the way I was doing things with my corporation. You can do this online. You don't need to go pay $1,000 to a CPA to set up a corporation. You can do this online. There's several websites that you can go to. One of them is mycorporation.com. You can do it online. Another website that I found that I'm going to be using is called IncFile, IncFile.com. IncFile. To run a S Corp for the state of, let's just look at here, for the state of Texas, that is going to cost me, hold on, a total of $349. That's it, dudes. $349. For the state of Florida, let's see what that'll cost me. Florida, that is going to cost, oh my, wow, that's pretty cheap. It looks like $119 to do that one. So every state is different depending on what state you're in, but I would seriously look at running your business through a corporation, having all your commissions flow through a corporation, because if you don't, and you're a sole proprietor, anything over $40,000 income, you're going to pay at a 40% tax bracket, and 40% is a lot of money to give to our wonderful U.S. government for taxes. I would rather pay, 6 to 10% through a corporation because of expenses, write-offs. You can also write off a portion of your office as an expense, a portion of your electricity bill as an expense, a portion of your cell phone. Anything that you're doing that is business related, you can write a portion of that off depending on the size and the space that you're using for your home office. So don't forget that you are running a business. This is not a hobby. So set this thing up as a true business. Set up a corporation. Go file your taxes through a corporation. Set up your commission drafts or commission direct deposits to your corporation. You're going to need a business checking account from your corporation. You won't be using it unless you go buy stuff. If you take a client out to eat, then you can write it off through your corporation, a percentage. I don't know what the tax rules are. The tax rules might change from the time that this video is made, which means that 1 minute from when this thing is over, it could change. So keep up to date with the tax laws. I'm not going to give you tax advice. I am nowhere near qualified to do that. Get somebody else who is licensed to give you tax advice. I'm just telling you what I'm doing and giving you information. So that is it for me. Set up your business through a corporation. Save money on taxes. Don't spend money that you don't need. I don't believe in wasting money. I believe in saving as much money as possible. So that is it for me. You all have a great day, and we will talk to you later. Bye-bye now.